Good morning, good afternoon, and welcome to Develop Your Edge with Anthony Crudele. I'll be your co-host, Schneider, CMT with NinjaTrader. And before we get into the good stuff, I do want to remind everybody that futures and options trading contains substantial risk. Is not for every trader. You could potentially lose all or even more than all of your initial investment. That's why we recommend you use risk capital. What is risk capital? It's money you can afford to lose, doesn't keep you up at night, doesn't extend your retirement horizon. Also want to remind everybody that past performance is not necessarily indicative of future results, and what we talk about here in this program contains neither trade recommendations nor financial advice and should be taken only for educational purposes. And with that out of the way, it is my pleasure to welcome back, of course, every Thursday morning, Anthony Crudele. How you doing, Anthony?
I'm doing great, Tom. How are you? And how's everybody doing out there tuning in today?
Well, you know what? It's kind of an exciting time, right? It's a shortened week. It's practically it's Friday, but a lot happening today in the markets. Everything's good here in Long Island. We've got another sunny day. It's amazing. The weather's been so good, and I know you're in the land of sunshine, Anthony, so it's not a surprise to you. But it is something that we don't get too much in the winter months, so it's exciting when it happens.
Yeah, spring or summer here pretty much year round in South Florida. And I love Easter time. It's one of
Oh,
my favorite times of the year. So I'm excited for this weekend. I'm a big fan of the ham.
yeah.
So yeah, I mean, I'm the guy who gets to the ham right away. But
And
before
I'm
we
with you there. I'll say this, Anthony. You know, there's something about Easter time. It just brings a joy to the heart. So hopefully, it's time to spend with family a lot of times. Hopefully you can spend with family and friends. But there's just something about the turning of the corner for us in the winter to the spring, and it's just a good time all around.
Oh yeah, no, I love it. And I'm looking at my notes for today, and we're going to talk about order flow cumulative delta. Uh, Now, many of you that are watching this have probably seen this tool before. It's a tool that's available on NinjaTrader. I use this coincided today. I'm going to talk about that with the order flow VWAP. And what I want everybody to get from today is, first of all, what is order flow cumulative delta? And it's just the net, what's bought on the offer versus what's sold on the bid. It's the net number. So if I buy 100 on the offer and then somebody immediately sells 50 on the bid, it's going to be a net positive flow of plus 50, right? And so one thing that I want everyone to understand is this is just a tool that I use to help understand confirmation of trend, contradiction of trend. Will we have follow through, or are people getting trapped? And so that's the number one thing that I want everyone to think about today as we go over the conversation and have that takeaway is confirmation, contradiction. Are they trapped, or are we going to get follow through? Because volume is so important because obviously if you have volume that supports a trend, it tells you that there is a lot behind it, right? And so when you see the bigger players coming in and they're buying more on the offer or selling more on the bid, that tells you a lot about the confirmation of that trend. And there's a potential for a lot of follow through. So it's not something that I would use or I use specifically for entry. It's something that I use more for determining entry size and also how long I would potentially want to hold a trade or not how long I would want to hold a trade, right? Because volume up doesn't necessarily mean we go higher, and volume down doesn't necessarily mean we go lower, right? Because ultimately, price and where they're buying or selling can create a couple of different situations. You can create the squeezes, which I think we've seen a lot lately. And as I was going back looking at my charts, I was like, wow, there's a lot of squeezes into these closes to where I saw a lot of selling. And then the next day we'd rally again. And you're like, wow, man, no matter what's happening towards these closes, you see a lot of longs build up in the day, sell them into the close, open up the next day higher, buy them back, sell them into the close, open up the next day higher. And you think to yourself, wow, we've rallied pretty good. And even though every day we're seeing selling on the close, we keep going up. And so it's just important to understand that up volume doesn't mean higher, down volume doesn't mean lower. Sometimes up price with down volume could mean a lot higher. And so I just want you to think about that today as we go through the cumulative delta.
Right. And this is a sentiment indicator. It's almost like saying, I want to know if this is a legitimate trend or if there's something in the volume that's telling me maybe this isn't as legitimate. I do like to, your idea that it could be that it's fine, right? If you see a lot of selling happening at the close and the market continues to climb, it doesn't mean that these people are necessarily long. They might be closing positions rather than opening positions. That's not really what we're concerned about here. It's really about that difference in those, where the bids and offers are.
Yeah, and one thing I want to also explain to people that why that doesn't really work the way you would think. I mean, it does a lot of times, but not always. And it's because remember why futures were built. Futures were built as a hedging mechanism, right? So the S&P 500, a lot of people are using them just to short. So if you own a basket of stocks or you own a bunch of SPY or you're long a bunch of stocks today going at unemployment tomorrow where the markets are going to be closed, you might be selling some S&P futures to hedge against your portfolio. So that volume coming in isn't really day trader volume. It's some of the bigger guys coming in and selling against, their positions. And so that's why a lot of times people can be misled by like COT data for S&P. I personally don't think it works very well. A lot of you guys know Larry Williams. I've known him for a long time and I've talked with him many, many a times. And he's like, only use it for commodities. For the S&P, it's essentially worthless. And so when you put that into perspective, we don't need to look at that really on the bigger picture, right? But I like to hone in on the short term. And I think maybe we pull up the charts right away today and we get right into this because these examples are going to show you something that I think is extremely interesting. So the first chart that I'm going to pull up is a 60-minute chart. Now, what I like about the 60-minute is that for me as a intraday to multi-day trader, right? I like to do some intraday trades. And a lot of times I'm trying to hold positions. Majority of the time I want to be in a position I can hold as long as possible, right? Because that means that I'm winning in it. I try not to hold losers very long. And so this time frame works very well for me. And it also allows me to sit back and see what is happening, maybe not in the big picture. Because like I said, that order flow cumulative delta maybe doesn't matter too much on the really big picture because of all these different things happening within the S&P. But on my time frame as a day trader, this helps a lot. And what I do is the first thing that I do is I start and I take the auto-anchored VWAP. And people keep asking me about this, and I've gotten some questions on social media. And this auto-anchored order flow VWAP, people are saying, I see it, Anthony, but you have it anchored to that price specifically in these videos. How do you do that? Well, what I want you to do is when you pull up your order flow VWAP, you're going to look to the top here and you're going to see where do you want to reset it? You want it the session, the week, or the month? And so when I look at this 60-minute, I'm going to look at it on a weekly basis because I want to see what the order flow is doing relative to the order flow VWAP for the week. A lot of my positions are only carried Monday through Friday. I mean, sometimes I'm holding things through the weekend, but not too often, especially in this market. It's just too choppy. So I like to see it week over week, and I might change that as time goes by, depending on the environment. So that's how you anchor it. Now, when you come over here, what I did was I went back to last week and just showing this week. And I want to show some examples of the order flow cumulative delta tool, which is down here on the bottom. And once again, this is also another tool that you add in your tool chain. You put it in here. You can see I have order flow cumulative delta. And I also should mention that I have this on the session, bid ask, and I also wanted to calculate on each tick. I don't want this data to wait till something closes. I just, you have on the bar close or on price change. I want it on every tick. Give it to me, baby, right? Let me know what's going on. So those are the basic settings for this. Now, what did I say at the beginning? Confirmation, contradiction, people getting trapped, or is it representing follow through? And what's really interesting is let's go back to last week. And what I look for is, here's the beginning of the week all the way to the left of the chart. And I like to use the VWAP just to see where we are trading relative towards it. A lot of you guys know that I talk about this a lot. It's just a good sentiment check. If we're below it, it's really telling me more we're bearish. If we're above it, it's really telling me more bullish, not necessarily for an entry type signal. But you look at the order flow cumulative delta, and the first couple of days of last week was pretty flat. You saw us just chopping around the order flow VWAP and just not much happening, right? Above it, they're selling it. Below it, they're buying it, and the market's just kind of chopping. But then you see this move here towards the end of March 28th, right? You see this thrust of buying that comes in, and then we get a close back above the anchored VWAP for the week. What did I say at the beginning? Confirmation, contradiction. Before this point, we see a lot of chop, and we just really have no clue what's happening. Then you see a burst of buying into the close, and then in Globex, we keep going higher, starting to push on the 1, 2, and 3 standard deviations around the auto-anchored VWAP. That starts to give you an idea that the buyers are now in control. So take this back into any strategy that you're looking at. The buyers are now supporting something that you're looking at, right? You're looking at a close on a daily above an auto-anchored VWAP, and you start to see the price move up with it. So this is a confirmation. What gets really interesting is look at towards the end of each of these days to the end of the week. Right at the end of the week, you see we start getting to 1, 2 standard deviation moves, right? And this is above that VWAP. And look at what happens towards the end of every close. Buyers all day squeezes into the end. Some will say it's margin calls. Some will say it's this. Doesn't really matter. Once again, I'm not looking for the why as much. I'm looking for is what is the reaction. And so what we see is sellers stepping in towards the close, but then every single day we're staying bid into the next day, into the overnight session. If you guys know, last week we just kept grinding up and up and up and up, right? And then here you go all the way towards the end of the month, and then you see all of this selling, net selling coming in these last 3 days on the closes, selling into the rallies. And what happens the next day is we open up again. These are things where you look at and you say, these are situations where I look at some traps into the close. So when I see a bunch of selling coming in towards the end of the day and the next day there's no follow through, it makes me think of one of two things. One is either people that are looking to hedge a position, because I talked about how the S&P could be used for that in the futures. One, they don't really need the hedge as much because we're going higher. So now they start to undo it, right? And then you start to see that grind higher. Or you see a lot of traders that have been in all day, they couldn't hold them into the close. They sell them into the close. And then the next day, they're like, unbelievable, we're higher again. Let me just buy them back. And so those are what you see as trap situations. That's why I made that point that sometimes when you see selling, especially into the closes, that doesn't necessarily mean follow through the downside. It's very important to understand that because sell volume does not equal lower pricing. It doesn't mean that, right? It can mean the opposite side. So I think maybe we stop and pull back here, talk with Tom a little bit about this, and then we talk about what's happening this week, which I think is also very interesting.
Well, and I think you said it the best, right? Is you've got one set of data that's price related, of course, the price of the chart, but then what could be confusing with the price, the cumulative delta, is this is a delta. This is not related to price in the sense that, like you said, if it goes up, if that indicator is going up, the price is going up, and vice versa. What it means is there's a disparate, it's when you see, like I'm looking at last week, you said those 3 days down, down, down at the end of the market. It just means that the sellers are coming in, but it isn't moving the price, right? It's most likely offsetting those longs that were taking in, at the beginning of the day, let's say, right? Like you said, sellers come in at the end of the day, and then the market keeps going. It's almost like, okay, I want to get back in again. And you have kind of beginning of the day, you have this green, not in the same magnitude, right? It's kind of a steady, like thump, thump, thump during the day. The green is getting increasing. There's a little bit of offset kind of midday, 2 o'clock area, and then it falls off. That to me, when you understand what cumulative delta is doing, that to me makes perfect sense.
Yes. And I want to talk about something else that I think is pretty interesting when you look at it, because as traders, I'm going to talk about how you could put some of these things into play, right? How can you take some of these things that we're talking about here and add them to your strategy? Because this is a tool to where I don't believe it's a strategy in its own, but what I do think it is, it helps you see some things that maybe can be a good confirmation to what you're looking at. Right. So they may not necessarily give you a trigger with order flow. And then there's guys out there like Order Flow Labs that have amazing tools that you can build strategies around. But when it comes to just the basics of what this is and how to actually become a better executor of your strategy, I want to show you some things that I think are very important and very interesting as to why I set up my chart like this when looking at order flow. So when we go back to the 60-minute chart, one thing that you want to look for and why I keep the standard deviation bands up is for the S&P, very seldom do we have much violation of a 3 standard deviation around a VWAP. Okay. It doesn't happen often, right? I mean, you could put a 4 standard deviation up there and maybe for 6 months, you may not see one, right? So that goes to show you that anytime we get to a 3 standard deviation move in S&P, and I've talked about this for Bollinger Bands as well, it is a rare occurrence. Okay. So when you see things like order flow pushing into a 3 standard deviation and it pushes it and pierces it by a little bit, and you look at order flow and almost look at the order flow amount of volume that comes in, that net number, because this is based upon each session at the bottom here, you could almost get a sense of how much order flow almost becomes resistance coinciding with a standard deviation. So what do I mean by that? Again, maybe you don't, it may not be the clearest. What I mean is that when you see order flow, let's just say here, get to, 20,000 plus on the buy side, right? And you see that price is moving up, but you're moving into a 3 standard deviation anchored VWAP line. And you see that it's struggling to stay above it, right? If you look at this almost every single time, they're reverting back to at least the 2 or the 1 standard deviation. This goes back to where up volume doesn't always mean up. It could mean trapped, right? And so you get a lot of people that last week were selling into the closes and getting squeezed. Now you see the build for the day and then the slight little rally into the close with a sideways rally, and then the volume comes in again to the upside, and then you get a trapped look because now it's not working, right? Now instead of selling into the close when they should be, they're buying into the close. Now, some of that could have to do with end of month, end of quarter. There's no doubt there's nuance there, but understand you just could see these things over and over again. So as a trader, you might look at this as a potential short with a really tight stop above a 3 standard deviation. Or if you've been playing it alongside, this is a trigger to say, look at volume is pushing into a 3 standard deviation and we're not getting follow through. We keep getting reversion. Maybe if you're trading around a core position, you're rotating out of it or you're getting flat. And it's extremely important to see this because then what I like about the anchored VWAP is that once we pierce it and I see that the volume down here has been really pushing higher, pushing up, and now you can't get above a VWAP, look at where we are now. So now what I think is very interesting about this current moment is that you're seeing all of the order flow coming into the buy side pretty much. It's all staying steadily positive pretty much every day, right? So you see a strong day the first day of the month, strong day the second day, third day a little bit flat, today a little bit flat, obviously 3-day weekend, unemployment tomorrow, kind of a weird day, but overall it's relatively flat. But for the week, it's up, but it can't get above the VWAP. So once again, price is showing us something, telling us something, and volume telling us something different. Volume is telling us that we should see the market probably try to keep going higher because you're accumulating long positions in the sense of the net cumulative delta. But price is telling us it's not working, so there's more sellers on the offer. So the buyers are buying into an offer that they can't get through. And so the sellers aren't really coming in aggressively selling, which you could see here as price continues to go down. What you see is a lot of times those longs that are buying into offers are just rotating out of them. So the delta stays relatively neutral, but they're trying to buy it, but they're not achieving what they want in price. And so once again, as a trader, this tells me that this is where you see a lot of squeezes lower. And so maybe, just maybe, we see a spike lower like we saw some of these in the past last week. That might be the time to buy, which is like psychologically, you might say to yourself, well, why is that? Well, now maybe those longs are tired of being in, and that little puke could be the time to step in and get long. So these are things to help you think outside the box, right? And this is to help you start becoming a better executor of your strategy when looking at cumulative delta.
Well, I like the way, Anthony, that you explain that, because when we think of volume, generally volume kind of supports price, right? So if you see a price move and traditional volume isn't there, well, okay, you can kind of see, maybe that isn't a legitimate move and the market reverts. This is kind of flipped, right? Here's a big move on the cumulative delta, but price isn't supporting it. Don't expect follow through. I think that's really interesting with the cumulative delta. It's kind of switched from what we're used to with volume, but the way you explain it, I think makes perfect sense.
Yeah, as a trader, a lot of times I like the extreme push is higher in delta and the extreme push is lower as entry points, because a lot of times those are stop runs. And that means that they're just people that eventually are saying, I just want out, just get me out. Anybody who's been in a position where they don't want anymore, a lot of you are working stops and that automatically gets you out. But then there's a lot of traders that have really, really large positions that aren't necessarily always working stops, and then they're going to rotate out of them. Or you see a bunch of hedgers come in because of a price violation, and all of a sudden that those come in and they create a bunch of volume and they create a wick that you would be used to looking at in a candle, but you're actually creating a wick in volume. And sometimes those extremes on those 3 standard deviations are really good entry points, whether they're for scalps or they're for longer term trades. And it's extremely important to keep an eye on this, because sometimes if you go back to last year, last year I saw a lot of selling in the cumulative delta and a lot of follow through. So from January through April of last year, it was not like what you're seeing here. It was a very different environment because the selling was following through each and every day, and we were staying below VWAPs and we were following through in lower pricing. So you have below VWAP, lower lows, and selling in volume, which just tells you as a trader, it's a very clear look, sell the rallies. Right now, we don't have that. I mean, this is why the S&P is choppy. I mean, there's other reasons, but this is one thing that you could see that the market is giving you the feedback to say volume is competing with price, and they're not on the same page a lot of the times. And that's why you keep seeing squeezes higher and squeezes lower, and you ultimately don't have much of a trend, because this is what happens when volume is arguing with price. And, that's just the way market works.
You mentioned the wicks on the cumulative delta. Can you explain? It doesn't seem like there are a lot of wicks, but they do occur. Like what's happening right now. Can you explain why that is? Is there some dynamic that I'm just not seeing? That's, volume to me traditionally has been, bar charts. They're just additive, but this isn't that. This is a net number. So yeah, of course there will be wicks, but can you explain why there don't seem to be so many wicks?
Well, because especially when it comes to the S&P 500, the book is so thick and there's so much liquidity that you don't see a lot of wicks in the S&P. I would guarantee if you pull up the NASDAQ or the Russell or the Dow, markets that don't have the trading book that the S&P does, you're going to see different wicks, because some players might come in and that volume is just a large print at one time. With the S&P, a majority of the wicks you're going to find are going to be on closes, on opens, and on data points. Right? Because at that point, everyone's going to try and be almost one-sided. And the bigger players, for the most part, are always doing a majority of their orders on the open and on the closes, because that's when the most liquidity is coming into the market, because pretty much everybody that has a position is either going to add or remove some near an open or near a close. Closes especially because of so many different reasons: margin calls, what's happening the next day. Remember, a lot of these stocks aren't open at night like futures are, so people are hedging stuff. There's just all sorts of positioning being done on the closes, and therefore you see a lot of wicks. And that's why in the S&P, you're mostly going to see that probably in the 10-year as well. But you could probably look at this in gold, oil, and some of these other markets, and you're going to get a little different look, and you've got to get in tune with what that is. And I just want to go back to even today, like the wicks. So look at today. Look at how you see like these wicks here for today, where it's like, oh, let's be a bunch of sellers. Oh, let's buy them back. Let's bid them up and let's sell them back. And what you're seeing is you're just seeing locals, traders going back and forth here. And we're not getting that dominance on one side or another. And what's the reason? Well, tomorrow's unemployment. It's a 3-day weekend. If you're buying into a rally today in the S&P or selling into a break, you're just buying into these standard deviation moves where you're seeing rotations back. So this is another way to look at when you see delta like this. It's telling you that we are most likely very range bound. There's no dominant player in the market.
Awesome. Thanks for that. Turtle is one of our regular viewers of the bookend shows, and he watches our show here and says you're very excellent at trader psychology. So a little bit of praise from our regular viewer Turtle. Anissa asks, and we'll get back to the question of the week. I know we're running short, but just real quick in the show, Anissa put in a question: what about the gaps on ES that haven't been filled? Um, I'm assuming those are gaps on price, but that's a question she put out. I don't know if that's something that cumulative delta can solve for, or what's your take on gaps in ES that haven't been filled yet?
Well, I think when you look at gaps, you're looking at regular trading hour gaps from one session to the next, because on Globex, there's very few gaps. Or if she's talking about gaps within cumulative delta, where like, but that isn't a gap because it starts over at the every session. So just maybe that could be a potential question she's asking in terms of that. But anytime that I see a gap, when you have regular trading hour sessions and it restarts every day, that's why the auto anchored VWAP, and I look at the 3-minute opening range and the cumulative delta when you're trading gaps. It's a very good tool, because when you go into, let's say, the short term, like today, you come in today and I'll pull up my 3-minute chart. And let's just say that we gapped. I don't remember exactly what yesterday's close was off the top of my head, and so let's just say you're looking for a regular trading hours gap fill. You would look at this on the opening 3-minute range and see where are we relative to the VWAP, and maybe volume follows through. But it's not a strategy that I follow. But if you are looking for gaps to get filled, you obviously want the delta pushing in that direction. You don't want people fading into the gap. Most of the time, you're going to want the volume in that instance to be supporting it, because you would want the order flow to be going through the book, not to be fighting the book.
Excellent, excellent. I think it's a good time to go into the question of the week. Question of the week is something that you can participate as a viewer on Twitter. You just send us a question, use the hashtag AskDYE, hashtag AskDYE, and also include @NinjaTrader in the tweet. And if we like it, we'll use it. And if you're in the United States, we will send you a nice little gift for participating. This week, though, Anissa, who is not in the United States, she had a great question that's pertinent to what we've been talking about. Please tell us more about delta divergence. I think you've done quite a bit on that today, Anthony, but how insightful it might be on different time frames. So you briefly mentioned the 3-minute chart just now. You had the 60-minute chart up. Is there anything that you might look at different time frames for?
Not really. For me, because intraday delta is intraday delta, right? The weekly delta is the weekly delta. There's really, you're not going to find divergence in it, because I reset it on every session. And when I look at it for the week, I just looked for the week. I look to see if it's building and what it's doing towards the closes and how we open the next day, right? So I look at it in that context. So I don't really look at it any other way besides that. And somebody else actually asked me a question, not to get away from Anissa's question, but in our YouTube, people are asking me, is it a better idea to maybe look at it in a line chart versus a bar chart? Now, the reason why the reason why that I like, number one, the cumulative delta and the candles, is because of the wicks that I mentioned, because it's visually appealing to me, right? Like, is it a green wick? Is it not? Right. And I like to see that in the delta. Some people will just look at it and maybe almost in a histogram form as well, just to see what it is and look at the net number. I like to look at it on a candle a lot of times, because for me, it tells me in that moment. Let's just say that I bought something and we didn't talk about this today, but let's say I bought something at the extreme on a candle lower, and then that next candle you start to see comes in green on my time frame. All of a sudden, you could be seeing that squeeze from that prior candle. So I like to see that as a short-term trader. And also I like to see that as a response off of a low or a high. Do you see a squeeze into something? And is it starting to come back? Like, does that volume immediately start to reverse? A lot of times when you're making highs or lows, and a lot of people, you guys are all familiar with like market profile, when you make that single tick higher or single tick lower, they don't spend a lot of time on that higher or low. That's why it's a single tick in market profile. So a lot of times what you'll do is you'll see a surge in and you'll see a semi-surge out. It may not be as big out, but sometimes it is. And I want to see on that next candle, on that next time frame, am I seeing the opposite occur? And that will help you determine tops or bottoms. Not that we necessarily look specifically for that, but in that short term, it really does help me.
Yeah, great answer. I agree. Looking at a line chart for versus a candle chart or a bar chart, I'll take those candle or bars any day of the week, because it just gives you that much more information. We're getting close to time, Anthony. I know you have one more little bit of a business to take care of.
Yeah, and also another question I just want to quickly address. Stan in my YouTube channel is asking me about if you could see this on daily charts. You could see this on any time frame. I think the 60-minute is equally as good as a daily. I like it as much because I could see a little bit more within it. But yes, you can just pull up a daily chart and see the bar for the day and see the net number. The reason why I like the 60 is you can see more of when that intraday high or low is made, and so it gives you a better, once again, context of the situation where that spike because it occurred, versus like on a daily, you might just see it up 10,000 on the day. Well, did it happen on the open, the close, the middle of the day? And I kind of want a little bit more information, but once again, to each his own. Final thing for today is, I want to mention these micro Bitcoin futures, but Bitcoin continues to be moving. I think a lot of people out there are still looking at just the big Bitcoin at CME Group as the only product. Theirs is the micro Bitcoin, and this is great for retail traders. I personally, when I trade Bitcoin futures, I trade the micro Bitcoin. The regular Bitcoin futures is a little big. This micro Bitcoin, you could definitely go there and learn about it. It's 1/10 the size of one Bitcoin, so it allows you to get access to Bitcoin if you want to trade it. And that sucker's moving pretty good lately. And I just wanted to let people know, give them some awareness that if you go to CME Group, you could just pull up the micro Bitcoin right there on NinjaTrader. I've done it many, many a times. So that was it.
Awesome. Thanks, Anthony. That's really interesting. And thank you for coming again another week. Hope you have a great Easter weekend.
Yeah, you as well, Tom. Everybody out there, if you are participating in the Easter weekend, I wish you guys all the best. It's a great time. Make sure you tune out for the weekend. It's important. Markets will always be here. Family won't. So take the time off. I know that I really cherish every moment for these holidays, and I truly tune out. Ham and wine for me this weekend, everybody. Hope you have a great one.
Excellent. Thanks, Anthony, and thanks to the viewers for participating. And we'll be back in about an hour, actually, with Larry Williams. We'll be here with Special Traders Workshop, and we'll see you next week back here on Develop Your Edge. Have a great trading day.
Larry's the best. Tune in.